Hello and welcome. You're watching ET Markets. I'm Tanya Aneja. Well, the earnings season was officially kicked off with TCS, and experts do believe that earnings downgrade is the biggest fear, as chances are good that the full impact of the recent surge in inflation would be seen on corporate results. So, to discuss this and much more, I'm going to be joined by a very special guest today. Mr. Vaibhav Agrawal is joining us. He's the founder of Teji Mandi. Thank you so much, Vaibhav, for joining us on ET Markets.
Thank you. Thank you, Tanya.
So let's start with TCS June quarter numbers only. The earnings failed to meet the street expectations. So how are you looking at the numbers? And also, the IT sector has corrected significantly over the past 6 months. So do you think it is the right time to buy the IT stocks?
Yeah. So first on your question on TCS. So I think the TCS results, while the results are slightly below consensus expectations, I think there are two important sort of takeaways. Even HCL Tech, declared results just sort of yesterday. So one is that demand is very strong. The demand pipeline continues to be very strong. And second thing is wage costs, which were one of the biggest cost inflation which was there for these IT companies. That's coming off quite sharply, right? So going forward, in the next quarter or two, I think we should start seeing wage costs sort of reducing. So that becomes an additional lever for players like TCS and HCL Tech to improve their margins. And as far as the corrections in IT stocks go, a lot of it is driven more by sort of the macroeconomic noise that we're seeing. So there's a lot of noise around recession and inflation and all of those kinds of things. So I think the IT valuations and the correction was driven more by that. I think fundamentals continue to remain strong. And at these levels, I think I would be a buyer in some of these names.
Okay. And any specific stock bets you would like to recommend?
I don't want to go so much into specific stocks right now. I think, because of some of the compliance requirements, but I think as a sector, this definitely looks interesting.
Okay. All right. And now let's come to the sector which is in focus right now. I mean, auto space. So do you think that the auto sector has priced in most of the positives, or the rally is still not over?
No, I think that the rally should go, but I mean, I think you have to also be more stock specific. So I would sort of focus on names that are present more in the passenger vehicle and the CV space.
Okay.
Because I think these are the two areas that should sort of see the highest uptick in volumes and demand as well. And we're seeing that in the auto numbers as well that come out on a monthly basis. So I think as far as valuations go, I think, this is a sector which has remained in a down cycle for very long.
Yeah.
Right. So CV, for example, like the average fleet is 9.9 years, right? So, which means that like the trucks have not been replaced in 8 or 9 years. So, multiple headwinds were there earlier. I think now also raw material prices are cooling off quite sharply.
Okay.
So, demand is good and it's coming out of a severe down cycle. So CV should do well, and PVs also, at least I think there's a lot of pent up demand. A lot of even the festive season is sort of next 5-6 months will have good demand from the festive season. So this will be the first normal festive season. And so I think both these sort of segments within auto look interesting.
Absolutely. And where do you see the value in the current markets? I mean, any sectors that you are bullish on that are looking attractive, especially after the recent correction?
So I think private sector banks, especially the large ones, they look very interesting. I would think that hospitals look very interesting. And I also think that names which are, capital goods and more capex related things, even they look interesting.
Okay. And also your thoughts on the newly listed companies and as well as the new age internet companies. I mean, shares of these companies have corrected significantly. So do you think it is the right time to step in?
So I think there are two things in them. One is that when they were listed, they were sort of priced. Yeah. I mean, they were pricing the moon. I mean, the expectations were sort of way too high. Okay. So I think that has normalized a bit. The second thing is that they suffered from the global tech sell-off, right?
Yeah.
And so within that, I think companies which have sort of enduring businesses, like say for example in food delivery or some of the other sectors where like no matter what the economic conditions are, people are yet going to continue consuming them. So I think those kinds of companies will do well. I think the others would sort of be driven more by business cycles. So even within the new age internet companies, I think I would look for companies where there is history of demand growth, revenue growth, and sort of like a sustainable business model basically.
Okay. And lastly, before we let you go, where are the markets headed in the second half? I mean, the first half has been brutal for equities. So is it the right time to buy the dip? And what are the factors that are going to rule the second half of 2022?
Yeah, so I think second half definitely looks much more benign than the first half.
Okay.
For several reasons. One is inflation is coming off.
Yeah.
A lot of the negative global commentary also that's there. I mean, I think to a large extent it's priced in. And now the narrative is moving from inflation to growth, right? I mean, focus of central banks to focus on growth. So I think that's one of the things. The second thing is I think that the economy itself in India, I think is very strong. We are seeing very strong sort of demand across consumer categories, across even power and cap goods and all of that. So I think overall India sort of as an economy firing, even IT services, engineering, exports, they're doing very well. So broadly, I think markets should do well. Nifty, EPS, I think that is sort of one of the North Star metrics of the market. So that should continue to grow at 15 to 18% in the next 2 to 3 years.
Okay.
So I think overall markets look positive in the second half of this year.
Okay. On that wonderful note, thank you so much, Vaibhav, for sharing your valuable thoughts and being with us here on ET Markets.
Thank you, Tanya, so much for having me on the show.